Hey guys, it's Simon with Trade and Perform Coaching. So let's jump into it. This is really just a preview for tomorrow. I'm not going into anything deep. I want to cover a couple of points that are important to getting the mindset correct for the week. So we know that we've come off a very low volatility week, right? And it was low volatility in our main traders. It's actually low volatility for all three. CL, NQ, and ES all had low volatility weeks, right? So when you have a week like that, the first thing that should be on your checklist coming into the week, the number one thing we're looking for is there a dramatic expansion in range, either in the European session coming into the US session, right? Or in the first hour of trading in the day session, right? So that you should have every day when I come in, I have checklists, right? And the first thing that I'm going to ask is, do I have an expansion of range? Now, mentally, I'm going to primarily prepare for a narrow range, right? But I'm also going to do a backup plan mentally for what I want to do for a wide range. This concept is really important, right? If I come in and I'm expecting a 9-point range for the whole day in ES, but overnight we have a 17-point range for some crazy reason, right? I'm going to throw that plan out the door. On a 9-point range, I'm willing to be pretty aggressive at 7 or 8 points of stretch, right? However, if we're going to end up with a 15 to 20 point range, I'm not willing to be so aggressive on that particular ES stretch, right? And I'm going to look to be more aggressive on the 15 to 20 point stretch with 5-minute tick divergence. And it's going to be the same setups that I would use as if we were in a 9-point range. However, I'm going to apply them when we're lower down so that I know that the odds increase, right? So trading is all about one thing. And it's important for anyone listening to this. First of all, I target a very high win rate, number one. Okay, I have very low tolerance for drawing down, right? I want absolute clarity on what trade I'm looking to take, right? And that's important. Some people are pretty comfortable. They have a large enough risk reward, and that the reward is so outsized versus their risk when their trades do work. They can have, as we know, a 30 or 40% win rate and still do okay. That doesn't match me psychologically, emotionally, or any other way, right? And particularly with the leverage that I use, I need pretty instant results from the setups that I get, and I really need to have the ability to pinpoint turning locations, even if they're for relatively smaller gains, right? But with a very high win rate. Okay, so important to know. Let's just kind of do a quick review of last week. And we'll go down the line. We'll start with ES, then we'll go to NQ, then we'll go to CL. Okay, so first, let's look at it from a volume profile standpoint, which I think is pretty important. And when we pop these open, and we look at ES.D, which just reflects the RTH, or the regular pit session hours, which are Central Times, 8:30 a.m. until 3:15 p.m., right? And what you're going to see is, first of all, Friday was an inside day. The high and low on an inside day do not mean a lot to me. They generally tend to be weak, and what you will see is that those highs and lows tend to get broken relatively easily when we have an inside day. And I would expect Friday's high or low to get broken on Monday, right? And I can show you, we have lots of evidence, right? When I make a statement like that for myself, or I'm going through when I'm going through the preparation process, right? So is what I said true? So I can go back and look in the past. So here was an inside day. The low was relatively easily broken, right? Here's an inside day. The high was easily broken. Again, this is an inside day. The low is easily broken. Again, another inside day. The high is easily broken. So I don't need to, when I make that statement, right, the first thing I'm going to know is I'm really not going to take a major stand at the prior day's high or low without significant evidence, right? Because I would expect that we're going to test the more important high and low, which would have been from the prior session, right? So in this particular case on ES, that would mean I would expect this high to get tested, this 93.50, and I would expect this low to get tested, and I would have very little regards for, it was such a narrow day, such low participation, right? That I'd have very little regards, and I would not want to really be dancing with that lower high. That's me. I just don't think it's a high odds setup. The next thing, we are back in balance, right? See how we had this range here? And there was 2 stages of this range. This is how I read market profile. It's not even market profile, it's just how I look at it, right? If you look at this prior trading range, when we were stuck between, let's just call it after the 24th, starting on the 25th, and we were stuck in this balance area all the way until, wow, why can't I move this? Here we go. All the way over until the 4th of May, right? And generally, when we were at the top of the range, right, this was the top, the 2388.75 was the top of the range, 2378.75 was the bottom of the range, which fits our model. Again, it's been 9 to 12 points of stretch. Very important that we keep that in mind. 9 to 12 points of stretch, right? So what do we need in order to break out? Well, the first thing we have to do is we have to get above 88.75 and hold, right? I would suspect if we cannot get above 80, so let's go through 2 ways. If we can get above 88.75, my natural target would be up here at 23.95.50 would be my first target, followed by 2400, followed by roughly, I think if you do a range extension, 2404. But again, those are upside targets and not necessarily short areas at new highs. I'm very hesitant to short in the top 1/5 of the market. I would be very interested in getting aggressively short if we could get below this 2378.78 and reverse. So let me restate what that would look like, right? If we can break below, come up for a backside test, and get a setup in this area for a push lower, that would make me interested in shorting. But, and this is really important to remember in ES, especially for those people who are out there banging their heads trying to make this thing short, the primary pattern on ES is this. This is how it works, right? It does not matter where you look in the range. Very few days on ES close at the low of the day. This is the rare number. The majority either close in the mid or at the top of the range, one of the two. Therefore, my primary trading strategy involves looking for the U-turn at the bottom and catching the ride back up. It doesn't work every day, but I do have specific price action setups that I'm looking for intraday that tell me we're about to get a U-turn, and then I look to take advantage of those. And generally, I'm very successful at pulling those trades out, right? So, what do we take away from ES? First of all, we're stuck in larger balance, right? We clearly have to get a close. If you'll notice, this is our high close in here, but the majority of the closes in this range came at 23.95. In order to break out, we had to have a close above 23.95 would be the first clue that we might come up and test these higher levels, right? The flip side of that coin is that we have a ton of closes back here between this 23.88 and this 23.80. A close below 23.78.75, which we have, and I know I'm drawing a lot here. So a close below 23.78.75, right? Which we did not have a single close for a long time, right? That would be a clue that we're potentially going to come back and fill in some of this poorly auctioned area on the 24 hours. But until that happens, until I see an expansion of range, until I see an inability for the market to turn, and a close at the low of the day, or a gap, right? Meaning we gap down overnight, we trend down out of Europe, and we open down in this area, I would not expect a push into this area. Bears have shown zero ability to come out and make a sustained push lower, right? So all of my focus and all of my efforts will be on catching the turn, right? And not getting locked in mentally. This is really important. Not getting locked in mentally on the short side of the trade. If you do take shorts, I don't really care to argue the point one way or the other, just that that's been the harder way. The win rate has been lower on shorts by virtue that we're in a bull market. Even trading sideways, you'd think shorts have been easy, but the reality has been is it's been hard to find really great short location in this area. It hasn't been so hard to find good long location, so I like it. The business is hard enough. I just want to stay on the easy side of the trade. I'm looking for longs. Again, unless my parameters get changed down here, and I'll make adjustments appropriately as necessary. So moving along, let's kill this. If we look, just take a quick peek at the 24-hour price action here. It looks much the same. Let's see this real quick. If we look at the 24-hour, much the same, right? We're in balance. We've got to get below this 23. Even on the 24-hour, you can see anything below 23.80 gets consistent responsive buying back up for really, we're approaching a month now. It's been a while, right? You can see that if we can get underneath this location right down here, this 2370 to 2372 area, right? The next key area is 2366 on a 24-hour, but then we have plenty of room all the way down to 2355. Again, that's going to require that bears actually can make any kind of push, that we can have range expansion, and we already know what to look for coming in coming into tomorrow morning. So I don't think there's anything else to say about ES except this. When we look at NQ, NQ is dramatically outperforming ES. Look at its angle of attack. So you got to remember, there's two trades that I have. ES I trade in a more balanced fashion. I expect it to kind of, my primary expectation for ES is that it does this the majority of the time, and some variation, but it makes a U-turn almost every day, right? NQ can be different, and right now NQ's in the middle of a beautiful trend to the upside. Right now, there's nothing bearish unless we can, I would have a line right here, and this is pretty plain and simple. Until we close below 56.36, certainly trade below, but right now it's simply close below. That was Thursday's low, right? If you have any bearish thoughts on NQ, unless you're some kind of genius fundamental analyst and you know NQ is about to fall apart and on its face, there's, in my eyes, zero reason to be short. We're looking for long entries. The angle of attack on the daily and on every other time frame. So here's the angle of attack. We have not backed off of this angle of attack, right? The lesser angle of attack is coming here, and anyone who's been in my room or has been following me for a while knows that I am all about trading in momentum with the angle of attack, right? And again, remember my purpose here. My purpose is to keep people from blowing up and going through boom bust cycles, right? Easiest way to do that, don't fight the market. Work with it. Now, that is not to say buy new highs, right? But that is to say when you get sell pressure, odds are when the market looks like this, when we get sell pressure, you're going to get responsive buying. And you can see when we bring it over to the, this is my momentum chart for my momentum trade setups. And you can see, again, what I'm looking for in this is I want, when I take a trade long and there's a momentum kind of environment, I want everything pointed up at a 45-degree angle or greater, right? And you can see on every time frame, all the way down to the 2-minute, right, that everything, the 240 time period, the daily, the hourly, the 15-minute, the 5-minute, even the 2-minute, right, there's no deviation from that push to the upside on NQ. And then the other thing that you'll see is that when you go back and look at the volume profile, right, in the daily chart, there's just nothing that says bearish on this. NQ is on fire, and your first clue that there's a problem would be a close below and a trade below 56.36 and holding, right? That would lock us immediately into this range right here, right? And you can see we backside tested numerous times the prior top back to 55.97, 5600. That's a psychologically important number, right? And so getting below 56, if we got below 5600, then I would say maybe you have the potential to roll to the downside. But at this point, that would require almost an 89-point, 100-point down day. And it is hard to understand how we're going to be able to get that. And even if we did, you'd have to think there'd be responsive buyers. Again, if new fundamental information enters the marketplace, that could change. But as of now, there isn't any fundamental information that's changed that picture. And you're generally going to have to find a way to motivate sellers to come in. Anyways, again, it's been the weekend. I've had a very relaxed weekend, so I'm not as sharp as I usually am. My point here is that NQ's on fire. I'm looking for long entries on NQ. There's not much more to say about that. And I'm using my momentum. I'm looking for an impulse move and then a pullback, and for my momentum indicator to get oversold so that I can take it in the direction of the trade. I hope to actually be able to record a few of these momentum trades that I get set up off the 15 and 5-minute charts. And when I have that, hopefully I'll be able to make an explanation. I've done it a couple times in the room. I've just forgotten to record it so that I can post it and show how the setup works. But Anyways, we're above the 20 period moving average. There's nothing secret about that. Buyers are in control. The relative strength in this thing is off the charts. Ups and oh, and then my last piece. You would think so. There's no rule that says it has to, but you would think that what ES is going to do, right? We've been stuck here, and if you look at this bigger picture, right, we're in this process of grinding out a building of energy. See how we grind out and build energy here, and it finally enough to move to the top of the range, right? So we build energy here, we grind up and moved out of range, right? We build energy here, push up. So we're building a lot of energy in this little area, and I would be looking for a vertical move and probably to the upside, right? We'll know. So we'll know if the gap is above, if we get a gap or a move above 23.95, that would be building energy for an upside move, right? If it's below 23.78, that energy would probably be released to the downside, though again, because of the current low volatility environment that we're in, there's absolutely no fear. You would think that the resolution would be to the upside, just using logic, not making a prediction, right? But I am very discouraged in shorting ES right now or NQ. So now, finally, let's go take a quick look at CL, right? And on CL, what you'll see is that it had a decent week, first up week in a long time on CL, right? We put in a low all the way down in the 44s, bounced significantly, and we've come up to 48. What you're seeing when you look on the day time frame there, but is that all the downtrends are still intact, right? Which is really important. I'd say this is the primary downtrend, roughly, and we're going to have to do some work to get above that. To get above this, we're looking very. It's looking very tired. The natural target, initial test area below for me would be this 46.24 area, right? Followed. Really, there's not much underneath, right? You would think that they would come back in and try to get a double bottom put in this area. We're trying. With that price action at the low there, tells me that they might try to make this the bottom of the range right here between 45.79 and 45.34, right? So that would be the bottom of the range. And then it would be logical, right? When you look at the price action and how the market responded, every time we dipped below this 49, we kept getting responses back up, right? So what that told you is when we were here is that there's wrong color, was that there was there's buyers all the way through. There's buyers all the way through in here, right? No matter where they dipped it until they finally broke it. I suspect that what would happen naturally is when we get back into this area, we're going to find responsive sellers in this area. But first we have to show the ability to get back through, right? But this is the other area where there's clearly been responsive buyers. We clearly trapped a lot of sellers. Most of this selling here took place in late U.S. session, early Asian session, right? It was basically a panic out on the bottom side, and I would expect this to come back in and potentially get retested, but certainly that 45.79 to 46.34. So remember, guys, when we're coming into the day, we're asking two primary questions on CL when we come into the day. What we're targeting is the momentum trade, right? The momentum trade always looks the same. Let's see if we can find the CL setup. I think it might be right here. There we go. So when the momentum trade sets up, where's my 5-minute chart, right? There's two components. For longs, the relative strength index is above 50, right? And we have a impulse move up. The dome is moving quickly. It's one of the easiest ways to spot that we're having an impulse move. And then what we're looking for. So to give you an example of exactly what we're looking for, let me go to it so you can go check the date out for yourselves. So this isn't an impulse move, right? Right here, this is just a move down on a 5 minutes. We haven't broken the range, right? But this is, right here, this is an impulse move up. Why is it an impulse move? So there's a couple things. First of all, if we look back, going on this date, we're above London high. Number one clue, right? That happened right on US Open, okay? Number two, if you look at the RSI here, the RSI gets above 50, right? It gets above 50. And number 3, once we make this impulse move, we're looking for the oversold condition, which is that it gets below 20. And you'll see that at each point, once it got below 20, we're looking for the lead-in bar, meaning the bar that closes in the direction of the impulse move with an oversold indication for a move in the direction of the break, right? So that's an impulse move. So those are the things that it requires. I want to go through that list again. RSI has to be at 50 or better. We have to be above or below London high or low, with rare exception, right? This covers 99% of the trades, right? Above London high or low. There's been an impulse move, right? And the speed of the market is very quick, and we're simply looking for the first and second oversold moves of the day to get our high odds win, okay? And again, the focus is on the entry, move up trailers, protect your stops. I'm all about not getting drawn down on this trade, guys, actually on any of our trades, right? Don't get drawn down. Get into the trade properly. Keep a tight stop. Usually the stop on this trade is between 10 and 15 ticks, no more, right? And again, the other rule on this trade is 2 stops back to back, right? You're done for the day. Why is that important? It's important because I know on this setup, I have such a high win rate, right? I have such a very high win rate on this thing that I know it's broken. I almost never get 2 stops back to back. I know it's immediately broken. So what do I want to do? I want to stop and come back the next day and just start over without digging a hole. That's the most important thing, right? So for me, that's my setup. That's my risk management. And I'm very, very focused on finding and hunting down this trade, okay? So the flip side of that is if we are in balance, we're simply looking for our balance trades. Guys in the room, you already know what these setups are. Key 50-60 retraces, key tests of London high and low, right? Those are our key trades. Again, the focus is grab 1 or 2 trades, move on to the next day. We're not trying to be heroes. We're just trying to grab money out of the market and move on to the next day. That's it. So the overall momentum, right? I want to go through the CL again. I know I'm kind of fumbling my way through, right? It's important on CL, the 240, right? We're above the 20 period moving average. This is a de facto, it's a trend line, obviously 20 period, but it's a de facto trend line for me. It's a moving average, excuse me, but I use it as a de facto trend line. I want to be below, right? I know it's hard to get an extension down if I'm not below the 20 period on the 240. I want to get below on the 240. I want to get below on the hourly, and I certainly want to get below on the 15-minute chart, right? And I want to remember what we're looking for to get this set up, right? How will we know? We will get an actual extension down, right? See how we get an extension down. The 20 period moving average will turn down. The relative strength will turn down. And now what are we looking for? We're looking for either places where it gets overbought, right? Backside testing key locations and giving us a lead-in bar. And we're looking for that 1 or 2 high odds trades in that environment, right? Or we're going, it's balanced. So right now, we don't have it on the 60, right? We don't have it on the 240. So I know the odds of getting, until we get below the 20 period moving average on these 2 time frames, right? I know that will be the first key for me going to look for and asking the question of if I'm having an impulse move. Otherwise, I know we are going to be trading in balance. Trying to think of if there's anything else I've missed going into the week. Journal. If you have anxiety about your trades or there's a trade where you're losing money on it repeatedly, right? Remember what we're trying to do. We're trying to repeat more of what we did well and move away from what we did poorly, right? So what we did well last week is we identified the price action in ES, right? And where we were pushing down on price but not getting participation from the broader market. We identified that really well on Friday. We were able to make really good money. We really only had one short. We only had one short last week. And again, when I looked back on that short, I kind of wish I hadn't taken it because it almost locked me into a short mentality. And that's so dangerous at the very top of the range in both NQ and in ES, right? It just tends to drive to the upside. I'm trying to think if there's anything else, guys. First touch of the zones. Obviously, we know that we think there's going to be counter rotation at those locations. We know where you're just in a jumble here. We're looking for a change in pace in ES, right? We're looking to pad our profits and using CL, both the balanced day trade setup and the momentum setup, if it shows available, right? And most importantly, guys, is if a trade isn't presenting itself, right? As frustrating as it is, our goal is not to force our own hand and try to create a trade that is not there. Journal tonight. Work on your meditation. Have a calm mind when you come in, right? Acknowledge what your fears are, right? Acknowledge if there's things that are bothering you. Make sure you're getting plenty of rest, that you're eating well. When the market has such low volatility, and ES is our primary money maker, right? And then we're going over to CL to try to grab a little bit of volatility. It requires a really sharp mind. It requires you to be really flexible in your thinking process, and we're totally shifting gears between what we're trying to get done in ES, which is kind of a rubber band snapback type trade, and what we're looking for in CL is sometimes that rubber band snapback trade when we're in balance, but often we're flipping, right? And we're trying to get, when we're setting up on momentum, we're trying to grab that momentum to the downside. So, guys, hopefully that helped. That's the preview for the day. I am looking forward to making money this week. We had a good week last week. I think we'll have a good week again this week. We just take it one step at a time. And remember, high odds setups. Know what your setups are. If you don't, step back. I can't reinforce enough. Don't draw down while you are learning. Pause, learn the trade, then execute it. You may think if you don't have time to wait to learn it, right? But it's a mistake, because what you end up doing is if you have to dig a hole, now you're going to have to spend all that time digging out of that hole, right? And I would also encourage everyone out there, find a mentor. If it's not with me, find it with someone else, right? Someone who has trading experience, someone who cares about you as a trader and is willing to work with you to develop you as a trader. You work too hard for your money to give it away. I can't stress enough. Don't let yourself be the person that gets drawn down. You don't have to blow up. Most very good traders have blown up in the process of becoming very good traders, but you don't have to follow that model, right? You can take time to learn, and there's some really good, outside of what I do, there's some really good mentors out there. FT71 does a great job with his market preview in the morning. It's not for everybody. It doesn't work for me, but I have an immense amount of respect for him and the way that he looks at the market, and I certainly respect volume profilers. There's other traders out there that are, some of them are willing to give their time for free, some of them not for free, right? Almost no one is willing to give individual one-on-one attention for free, but there are some very good rooms out there. And if my last piece, the last thing I would say, if you're new and listening to this, right? If someone's telling you it's easy and there's easy money out there, you don't have to work hard, be very suspicious, because I know I work very hard at staying consistent, and everyone I work with, every single guy I coach, I don't have one guy who has not worked his backside off to get profitable, stay profitable, avoid drawdowns, and really learn what their edge is. And so I congratulate those guys. And anyone you see who's made a lot of money in the market, they didn't do it by accident, and they didn't just happen to be at the right place at the right time. I guarantee you they worked their ass off, both on their ability to manage, just like what they talk about in when they're talking about Navy SEALs or any military. They managed their ability to think clearly under duress, right? They knew exactly what they were looking for in terms of setup, and they were disciplined in their execution and disciplined in their risk management. Risk management, risk management, risk management. That's all I can say. So anyways, if anyone would like to join the room and see what we do on a daily basis, I think it's a great value. I do charge. It's $95 a month to be in the room. You're welcome to be my guest for 5 days for free of charge. Send me an email to tradingperform@gmail.com. I'm more than happy to welcome you. And in the, I guess now 4 years that I've been doing this, I've helped a lot of traders move from boom bust trading to consistent, profitable trading, and also going through periods where you avoid drawdown. Anyways, hope everyone has a great night. Hope all those moms out there had a wonderful Mother's Day. I'm going back to join my family. I'll talk to you all later. Have a great night.